Okay, so in this video I want to talk about my long gold against the Australian dollar position. So I would actually like to add to this position. I actually wanted to add to it earlier today while I was at work, but decided not to. It was around 2060 at the time, so that would have been a good time to get in. But looks like I'm not going to be able to get that price. However, I think in terms of how much I want to buy at this moment, I'd say ideally I wanted to get twice the position that I'm planning to put in, but I'll settle for one now because since it's popped up, I actually do think that there'll be a chance to get it cheaper. So you see that perfect breakout pattern, it's absolutely shot up after the weekend. So that's the weekend. It's continued to climb higher. I would probably be happy to just get one leg, half of a leg for now. So that's about 0.64%. In into 0.7, say. I'll probably be putting a stop around here. And if I do that, that will bring my net risk to that will bring my net risk in my portfolio to 8.05%. I've still got a fair amount of risk that I can add to my gains and my income strategies. And that will bring my gold risk in the Australian dollar to 1.94. So I'm definitely happy to increase that risk. But for the moment, I'll just add 0.74% because I think there is a potential to get into gold against the Australian dollar a little bit cheaper. If we see it shoot up and then pull back, that's when I would actually want to get a little bit more in. But I do think it's potentially going to make its next leg up. So we'll see how it goes. And essentially, the rationale behind the trade, which I actually talked about in my trade review in video TMM number 25, was essentially that technicals look very good. I'm looking at doing maybe about a 1 month time frame. I want to see it break higher, and my system can use more risk. Correlation is I'm admittedly very focused in the precious metals exposure at the moment. Technical wise, it's looking like a very perfect breakout pattern. Intermarket wise, gold against the US dollar does look a little bit weak. That's why I want to get into gold using the Australian dollar. I think there's likely to be about a 10% chance that it'll go to 2,200. 20% chance that it'll just come up to 2,100, 40% chance that it'll actually just go nowhere, 20% chance that it'll go down to 2,000, and 10% chance it'll go to 1,900. Now, if the price continues to move up, I'll probably actually add to the trade, especially if it just keeps shooting up without having much weakness in the price. Then I think that might be a good sign that I should be having a bigger position on. Now, if price does move down, on the other hand, well, I wouldn't really look to get out just yet, but if it starts to get around back into this area where it was building up the breakout pattern, So around this area, then that's probably when I might be thinking about getting out of some of my position. Psychology right now is fairly neutral, so we'll just have to see how it pans out. Thanks for listening.